Good, good morning, good afternoon, depending on when and where you listen to this call from. Nicholas Conti here, representing King Visions FX, back again with some more news you guys could use. And today we're actually going to continue into our strategy series. We're going to give you guys some of our time-tested strategies and methods that we're going to be using to actually extract pips out of the market. So without further ado, we're going to jump into a chart, provide you guys with the rule base, and let you know the mindset or the actual theory behind this strategy. So let's take a look at the chart here. And first things first, let you guys know which actual tools and indicators we're going to be using. So you can see here, we want to actually add a Bollinger Band on our screen. You can always find that from the indicator section. We also have a RSI. Now with the settings, we're going to leave both of these default. The Bollinger Band is under the 20 period, also a 2 standard deviation, which is actually default. We also have the RSI using a default 14 period setting. And last thing we do want to add here is what we call our day breakers, our session breaks. So you go to settings, click on session breaks. What that's going to give us is a day's worth of data. So we already have our rule base here. So it's going to actually mark off with these lines a full day's worth of price action. Now, a little bit of preference of the strategy, and we can discuss why this methodology kind of works. Now, this particular strategy will take advantage of the fact that the banks are required to close their balance in their transactions by the end of each business day. Now, as a trader, we can use this requirement to our advantage. Now, when the banks encounter days of very high volume or volatility, the result is a large number of orders. The banks are legally required to balance their books each day, which can actually lead to a scramble within the last hour or so of business, so they can actually get things registered and properly balanced. Now, as a currency trader, we can actually watch this take place, and more importantly, we can watch for a great trade setup. This will actually unfold right before our eyes. Now, when the bank begins to tally or close their book each day, the transactions are scrutinized and they want to ensure accuracy. So they want to make sure that you have a buyer and a seller on each side. Now, the daily in accounting can include and ensuring that the winning and losing trades are actually accounted for. Now, this presents a opportunity for us traders to take advantage of a squeeze play that forces the bankers to act in a particular way to actually reconcile their balance sheet. Now, the predictability happens due to the fact that the bankers simply don't have many tools which they can bring everything into balance, except for either buying or matching buying orders with selling orders. So it creates a pretty nice, straightforward move, and we can actually trade alongside of the bankers. So it's pretty nifty setup, a strategy, and we want to dive into this, see if we can help you guys provide some value. Again, always, if you do back test this, you see that this is a great, or you actually take advantage and you like this strategy, feel free to leave us a comment. Let us know, how it's working for you. And also don't forget to hit that like button or follow us on any form of social media. So let's dive into this strategy. Now, the bankers open and close, what we're going to be looking for is for a candle or one or two candle closes above or below the Bollinger Band. We also want to see price kind of stabilize, which should actually form a pivot high or a pivot low, depending on which way we're trading. Now, if we're trading bullish, we're going to be looking for a pivot low. If we're trading bearish, of course, we're going to be looking for a pivot high. Now, for pivots, to identify a pivot, I want to show you guys that as well. We're going to be looking for actual color changes in the market. So we want to see a red bar or a downside bar change over to a green. If we're looking for a pivot to identify if this was a pivot high, we want to see a green bar turn into a red. So for pivot lows, we're going to see red turn to green. That identifies a turn or a pivot in the market. For pivot highs, we want to see green turn to red. That's going to be important later on as we dive and look at these actual setups. Now, once we're in that trade, we actually want to watch for price to dive back or for them to balance their order books. And it's going to typically go towards the median of the Bollinger Band. Always remember that the price action may not reach the Bollinger Band. So we do need to monitor this. It's going to be more of a scalping opportunity that presents itself day in and day out throughout the market. Now, we may not see this every day, but we do want to watch because it's going to be a great high probability setup for us. So you notice we did have the day breaker, so we can distinguish the price action between that day. Now, we also want to be at our trading desk at a specific time. I always call it NYSE Open or New York Stock Exchange, and we also have the um, gap over, which actually coincides with London and New York, both trading or doing facilitating trade. So with U.S. traders, we can generally see this setup come into play anywhere from 8:30 a.m. to around 11:30 a.m. Eastern time, 15:30 GMT for all my global traders. But we want to be in the market. So in my actual time zone, we are central. So I get up and get on my computer around 8 o'clock in the morning, and I start looking for this setup. For my Eastern traders, you'll be at your desk around 9 o'clock, and we can see this thing play out in live time. So let's give us an example, and we'll show you guys exactly what we're talking about. So here in this hour, excuse the UTC time, it's off a bit, but we see here about 7 o'clock, which would be 8 o'clock my time. We can see the setup happens. We have price come beneath the Bollinger Band. We have the red, green, green, and go time or the explosion right at 8:30 Central. We get a nice explosive push. Now, show you guys this isn't just a one-off thing. This happens time and time and again in the market. Oh, we see here, same setup. We have the 7 o'clock hour. We see price right at the tip of the Bollinger Band. We come down to the Bollinger Band and we kind of stabilize right around 8 o'clock. Again, it's not going to be exactly at the 7:30 time, but these are the times we want to be aware. We start getting rejection, nice candles. We see the actual pivot here. So we want to look to start entering this trade. Now, for the rule base as far as scalping, we want to take it right to the Bollinger Band. As you get more proficient with this setup, we can do other things that's going to allow us to gain more reward without taking more risk. Maybe things like actually twin trading, and we will actually put our stop above the previous pivot. So we want to have our stop loss. Well, first and foremost, we want to only risk what we can afford, or what we want to know what we want to stand to win or to lose. So we want to risk accordingly, and we can actually use, as far as a concrete stop, we can put it above a pivot, one of these close pivots, and we can actually take the first trade off. Once we get to the Bollinger Band, we can take the second one off later on throughout that day, and we can actually allow this to mature and gain more profit. So we did the twin trading method. We would have got in here about 118.78-ish, had our stop tucked below, above the previous pivot. So we're just only looking at a slight, right about 5 pip stop loss. We ride this thing down. The momentum stopped around 1845. So almost a 10-to-1 trade by using the twin trading method. And we also scalp, possibly with a nice, decent lot size, for at least 10 pips. So the most high probability setup will be the scalping method, where we just take price to the Bollinger Band and we ride the momentum and get out. When we actually develop a little bit more fortitude, we could have turned that into a right around a 10-to-1 risk to reward trade. We also notice how the Bollinger Band line was playing as a dynamic support. And we have something kind of similar here. So beneath the pivot, take off, and this initial move would have gave us around 40 pips just from looking for this bankers open, bankers close method. So I want to kind of keep this short and sweet so we can, post this to different forms of social media. Again, if this strategy does help you guys, feel free to leave us a like. Follow us on all forms of social media. Last thing you want to do is just make sure we covered everything. Let's see if we can find an actual buying opportunity in the market. Same time frame here at 7 o'clock hour, get the pivot form, and we take off to the median Bollinger Band. So stop and leave here, and we will actually, take out the trade here. So we're looking at a quick 10, 15 pips. Go ahead and take some position off the table, secure the bag. We can actually allow this to progress throughout the rest of the trading day. Remember, this is the end of the day. So we continue to hold this. We're going to be looking at turning that 10 pip move into more of around 40, 50 pips. So this strategy is very convenient. Gives you a lot of time freedom back. You guys could sit here, look for this setup, get in and out of the market. This also does work on GBP USD. You'll see this generally happens around the same time on the same pair. The beauty of this is that we can lather, rinse, and repeat. So we can look for this because we do know now that the banks are forced in a scramble to reconcile their books. This goes for German and or for Berlin and also the London bankers. So we notice this when they get ready to go off what we call offline, we'll see them adjust these books. And the bankers close has turned out to be a very dependable, high probability trade exists to set up due again to the facts that the banks are forced to act in a particular way. So we want to get to the point to where we're trading alongside of them, following the flow. We know they are the ones that move the market. So great opportunity. Hope you guys got some value for this. Again, this is Nicholas Conti representing King Visions Forex. Back with some more news for you guys. Make sure you do hit that like button, follow, subscribe, and we're out.